Lawmakers in much of America may be breathing a sigh of relief that Washington at least temporarily avoided a catastrophe by raising the debt ceiling and averting a default. But countries that have lent the U.S. trillions of dollars are reacting skeptically to news of the deal, which calls for cutting the national debt by at least $2.1 trillion over a decade. China's ruling party newspaper said the U.S. had merely pushed off debt problems, and Russian Prime Minister Vladimir Putin said the U.S. is a parasite that is living in debt.
There's always going to be criticism and sniping, and frankly, the U.S. has also sniped at other countries, so we cannot, we don't want to be the pot that calls the kettle black here.
America's creditors remain concerned that the U.S. has not taken the far-reaching steps necessary to restore its financial health and that it could undermine the international financial system. Experts say the debt agreement offers few measures to invigorate the anemic economic recovery.
If taxes go up next year as much as they're currently scheduled to, and spending continues to fall, that's going to be a big drag on the economy, and when the economy is already rather weak. So the odds of a double-dip recession have definitely gone up.
Some experts say the number one lesson people around the world are concluding is that the U.S. political system is deeply divided and will have difficulty making choices over the next decade. Many Americans agree.
I think definitely politics has gotten in the way of proper policy.
The dollar remains the global reserve currency and the basis for most transactions. For several years, China, Russia, and other emerging markets have advocated the dollar relinquish its primacy in global markets. Economist Joe Gagnon agrees.
Well, I actually agree with them on that. And I think part of the problem is that they are actually the people who are pushing the dollar up more than anyone, especially China. And so they're sort of guilty of the thing that they're complaining about.
So far, concerns about U.S. financial health are not yet reflected in the market for U.S. Treasury bonds. The government continues to borrow money at extraordinarily low rates.
Frankly, it would be a good thing for the United States if foreigners would stop buying our treasuries. It would actually be good because they'd have no choice but to buy our exports because the dollar would fall and we would be more competitive in the world.
The U.S. Treasury Department said it will sell $72 billion of notes and bonds next week, returning to business as normal after a last-minute hike in the debt limit. Rhonda Pence, Press TV, Washington.